All right, so let's take a deep dive, shall we, into the world of Steve Cohen and SEC Capital.
Sounds good.
You know, the hedge fund world, right?
Yeah.
It's usually, you think, calculated risks and big wins, but with Cohen, things get a bit more complicated.
Yeah, a bit more.
We're talking whispers of insider trading, aggressive tactics, and a lifestyle that'll make your jaw drop.
It's true. Cohen's story isn't just about financial success. It's about pushing the boundaries of what's acceptable.
Right.
Constantly seeking an edge, even if it means operating in a morally ambiguous space.
Yeah, and to really understand how he built this empire, we're going deep into Black Edge.
Great book.
The book by Sheila Kolodkar.
It is a great book.
It's not just numbers and trades. It's a deep dive into Cohen's life, his personality, and the culture he created at SEC Capital.
Kolodkar's reporting is really impressive.
Yeah.
She doesn't just scratch the surface. She gives us a real feel for Cohen's world, both the extravagant and the intensely competitive.
Okay, so let's rewind to Cohen's childhood. Who was he before the millions and the mansions? It turns out his interest in the stock market started young.
It did.
His grandfather was a successful investor, and Cohen was drawn to the idea of financial freedom early on.
That early exposure is key.
Yeah.
It wasn't just about the money for Cohen. It
All
was
right.
about the power and independence that came with it. It really set the foundation for his relentless ambition.
And that ambition led him to Gruntle & Co., where his talent as a trader became impossible to ignore.
Right.
He had this almost uncanny ability to read the market, to anticipate movements. They called him a tape reader, someone who could just feel the flow of supply and demand.
It's fascinating because it wasn't just luck or intuition.
Yeah.
He combined this natural talent with a willingness to take risks, to push harder than anyone else. That's what made him a star, earning millions at a young age.
But that intensity also started to cause some friction.
Uh-huh.
Cohen was clashing with risk limits, pushing back against the rules that were meant to contain him.
This is where we see those early signs of a pattern.
Yeah.
Cohen was determined to get ahead, even if it meant bending or breaking the norms. It foreshadowed the controversies that would later engulf him.
And those early warnings became a reality when the SEC launched an investigation into his trading activities involving RCA Corporation.
Right.
This was during a crackdown on insider trading, so the stakes were high.
This investigation wasn't just a legal hurdle. It was a defining moment for Cohen. It solidified his view of the SEC as an adversary, and it reinforced his belief that he had to operate on his own terms.
He was defiant, maintaining his innocence throughout the ordeal.
He was.
He emerged unscathed, but this experience with the SEC left an indelible mark.
It did.
Shaping his approach to risk and regulation.
It's important to note that this wasn't just about avoiding legal trouble.
Right.
The experience seemed to validate Cohen's instincts, making him even more skeptical of external oversight.
Okay.
It fueled his desire for control, which ultimately led to the creation of SEC Capital.
That's right. SEC Capital wasn't just another hedge fund. It was Cohen's kingdom, a place where he could operate with complete autonomy.
Yeah.
Free from the constraints he'd encountered elsewhere.
And the culture he created at SAC reflected that.
Right.
He wasn't interested in playing by the traditional rules of Wall Street. He sought out traders who mirrored his own hunger, his own competitive spirit, and perhaps his own willingness to operate in the shadows.
He built a team in his own image, right?
Yes.
They were handpicked for their talent and their appetite for risk.
Uh-huh.
It said he even asked potential hires about the riskiest things they'd ever done, almost like a test of their character.
Exactly. He fostered an environment of intense competition where profits were paramount and taking risks was rewarded. While this led to extraordinary financial success, it also created a breeding ground for ethical dilemmas.
It was like a pressure cooker, where the drive for returns could push people to cross lines they might not have otherwise. And it wasn't just limited to the trading floor. Cohen's personal life was also changing dramatically during this time.
It was.
He married Alex, a woman from a world far removed from Wall Street, and they started a family.
This adds another layer to Cohen's story.
Yeah.
We see the contrast between his public persona as this financial titan and his private life as a husband and father. It raises questions about the pressures and sacrifices that come with such relentless ambition.
And as his wealth grew, so did his lifestyle. We're not talking modest upgrades here.
No, we're not.
He transformed a simple Greenwich estate into a sprawling mansion, complete with an indoor basketball court an ice skating rink, and even a 2-hole golf course.
It's a classic story of excess, but it also highlights the growing disparity between Wall Street elites and the rest of the world.
Yeah.
It fueled this perception of Cohen as being out of touch, disconnected from the realities most people faced.
This extravagant lifestyle, this growing disconnect, it all seemed to coincide with a shift in his professional relationships, particularly with his longtime partner, Kenny Lissack.
That's right. Their relationship, once a cornerstone of SAC's success, began to crumble. There were accusations, personal betrayals, and a messy breakup.
Wow.
That exposed the darker undercurrents beneath the surface of their partnership.
It seems even amidst the triumphs, personal relationships were strained. They were. Perhaps even casualties of Cohen's relentless pursuit of success.
Absolutely. It marked a turning point for Cohen, signaling a growing isolation, a tendency to trust fewer people as he tightened his grip on SEC capital.
Yeah.
And this all played out against the backdrop of a financial world that was undergoing a seismic shift.
Yeah.
The hedge fund era was in full swing, and Cohen was positioned to ride the wave.
So we've got Cohen now operating solo, leading a firm built on his own aggressive philosophy and stepping onto a Wall Street that's increasingly dominated by hedge funds like his own.
Right.
It's a recipe for both incredible success and potential disaster.
It is.
And that's exactly where we'll pick up next time as we explore how Cohen and SAC Capital navigated this new landscape, the strategies they employed, and the increasingly blurred lines they encountered.
Looking forward to it.
Last time we left off with Steve Cohen at the helm of SAC Capital, right? A firm built on his own philosophy of aggressive trading and stepping into a Wall Street, increasingly shaped by hedge funds like his own.
Yeah, it was a time of massive opportunity, but also intense competition.
So much competition.
And with that competition came immense pressure to find an edge to outperform rivals. Cohen had always been known for pushing boundaries, for finding creative ways to gain an advantage. But as the hedge fund world became more sophisticated,
Right.
those boundaries became increasingly blurry.
And one of those blurry areas was the use of expert networks.
Yeah, expert.
These networks connected hedge fund traders with industry insiders.
Right.
Who could provide valuable insights into specific companies and markets.
Mm-hmm.
Sounds harmless enough.
On the surface, yes. The idea was to gather information to conduct research. But the line between legitimate research and insider information could be incredibly thin.
Yeah, I see what you mean.
And as competition intensified, some traders crossed that line, seeking out information that was not only valuable, but also potentially illegal.
And Cohen, with his relentless drive to win, seemed to encourage this aggressive approach.
He did.
He wasn't explicitly telling people to break the law.
Right.
But he created an environment where pushing the limits was rewarded.
It's this culture that really comes into focus in the case of Matthew Martoma, one of Cohen's star traders.
Okay.
Martoma was obsessed with finding an edge, and he discovered a potentially lucrative one through his connection with Dr. Sid Gilman, a leading Alzheimer's researcher.
So we're talking about a Wall Street trader forming a close relationship with a renowned scientist. It sounds like the setup for a Hollywood thriller.
It really does. It's a fascinating case study in how these expert networks could be exploited. Martoma cultivated a close relationship with Dr. Gilman using their shared interest in Alzheimer's research.
Interesting.
To gain access to confidential information about a clinical trial for a new drug.
And this information was valuable because...
Well, knowing the results of that trial before they were publicly released could allow someone to make massive profits by trading on that information.
I see.
It's classic insider trading, plain and simple.
And Martoma, it seems, didn't hesitate to use this information to his advantage, ultimately generating huge profits for SEC Capital.
Oh, right.
But as we know, those profits came with a heavy price.
They did, that's right. Martoma's success with this trade drew the attention of the FBI, who were already investigating SAC Capital for other potential instances of insider trading.
Oh, wow.
As they dug deeper, they uncovered this intricate web of connections and information exchange.
So Cohen's firm was now under intense scrutiny. What was his reaction? Did he try to distance himself to claim ignorance?
He maintained his innocence, insisting that he was unaware of any wrongdoing. But the pressure was mounting as the FBI used wiretaps, informants, and aggressive tactics to build their case. And remember those former employees we mentioned earlier, guys like Donald Longyu and Noah Freeman?
Right, the ones who had left SAC Capital and gone on to start their own firm?
Exactly. Well, their firms, Level Global and Diamondback Capital, became targets of the FBI as well.
Really?
In a dramatic series of raids, agents descended on their offices, sending shockwaves through the hedge fund world.
It was a clear signal that the government was serious about cracking down on insider trading, even if it meant targeting some of the most powerful players on Wall Street. And in the midst of all this, Cohen himself was summoned for a deposition by the SEC.
This deposition was pivotal.
Yeah.
Cohen, facing intense questioning about his knowledge of insider trading within SAC Capital, had to walk a very fine line.
Right.
He needed to defend himself without implicating the firm or revealing too much information.
So he was playing a high-stakes game, trying to outmaneuver the investigators while protecting himself and his empire.
It was a tense back and forth. Cohen maintained his innocence, but offered vague answers and claimed memory lapses when pressed on specific details. His evasiveness only fueled suspicions.
And ultimately, the walls closed in. In 2013, SAC Capital was indicted on insider trading charges, marking a stunning fall from grace for Cohen and his once untouchable firm.
This indictment sent shockwaves through the financial world. It was a major victory for the government and a clear sign that even the most powerful hedge funds weren't immune to prosecution.
So it seemed like the game was over, right? Cohen had built this incredible empire only to see it crumble under the weight of its own ambition and the scrutiny of the law.
You'd think so. But remember, Cohen was a master strategist, a skilled negotiator. Facing overwhelming evidence and the potential for a lengthy trial, he chose a different path.
Oh, really?
He struck a deal with the government, a deal that would have profound consequences for both him and SA Capital.
What kind of deal could someone in his position even make?
It was a record-breaking settlement.
Right.
Cohen agreed to pay $1.8 billion to resolve the insider trading charges against SAC Capital.
That's a lot of money.
It was a massive sum, even for a billionaire like him.
And in exchange for this massive payout, what did he get? Did he avoid jail time?
That's the crucial part of this deal. While SAC Capital as an entity admitted wrongdoing, Cohen himself avoided any personal criminal charges. It was a strategic move that allowed him to protect his personal fortune and reputation.
Wow.
Even as his firm was effectively dismantled.
So while SAC Capital as we knew it ceased to exist, Cohen, the man who built it, emerged from the ashes, albeit with a tarnished reputation and a significantly lighter wallet. It's almost Shakespearean, this rise and fall, this dance with power and ambition. But this isn't the end of Cohen's story, is it?
No, it's not. And that's what makes this story so compelling. Even after this massive legal battle, even after his firm was brought down, Cohen found a way to reinvent himself to return to the world he knew best.
It sounds like we've got another chapter to uncover. What happens next? Does he try to rebuild his empire? Does he disappear from the spotlight?
We'll delve into that next time as we explore the aftermath of the SAC Capital saga and see how Cohen navigated the challenges and opportunities that awaited him.
So last time, right, we were talking about how Steve Cohen struck this deal with the government, this record-breaking $1.8 billion settlement to resolve those insider trading charges against SAC Capital.
Huge settlement.
Yeah, and while the firm admitted wrongdoing, Cohen himself dodged any criminal charges. It felt like the end of an era.
It was a big turning point, but Cohen's story, it doesn't end there.
It doesn't.
No, he's a resilient guy, you know. He may have lost SAC Capital, but he didn't lose that ambition or his drive to succeed in finance.
So what happened? Did he just walk away with whatever money he had left and, enjoy quiet retirement?
Not quite. He kind of laid low for a bit, but within 2 years he was back.
Really?
Yeah, he rebranded his firm, transformed it from SAC Capital into Point72 Asset Management. Kind of a fresh start, a new name, but a lot of people saw it as a continuation of his old ways, just with a different look.
I bet there was a ton of skepticism. How could he convince investors to trust him again after that huge scandal?
It was a challenge, for sure. He had to rebuild that reputation, prove that Point72 was playing by a different set of rules.
Right.
So Cohen brought in a former federal prosecutor to head up compliance. He implemented stricter controls and really pushed this culture of ethical conduct.
Okay.
It was a real effort to distance himself from the whole SAC Capital mess.
So a mix of, image rehab and actual changes to how things work.
Yeah, I think that's fair. It's tough to say what was really going on in Cohen's head.
Right.
But his actions seemed to show that he knew he had to adapt to prove to everyone that he could operate legally.
And did it work? Did the investors come back?
They did, eventually. It took time, but you can't ignore Cohen's track record. He had a knack for making money, and that attracted investors, even the ones who might have been hesitant after the SAC Capital thing.
So he kind of weathered the storm. Lost SAC Capital, paid a huge price, but he got back in the game, managing billions again.
He did.
It's pretty amazing, really.
Yeah.
It shows how resilient he is, and maybe says something about Wall Street, where even huge scandals don't always end careers.
Yeah, it does make you think about accountability and what success really means in finance.
It does.
Can someone who's been operating in a gray area for so long really change? Or are they just learning the new rules of the game?
It's a good question.
Yeah.
It's interesting that even after falling from grace, like that Cohen could bounce back and operate at such a high level.
It shows how complex Wall Street is. Success is often measured in profits and reputation, while important can sometimes be rebuilt or even ignored.
It's wild. And, while he's rebuilding his financial empire, Cohen's also making headlines in a completely different world, the art world.
Oh, yeah, that's right. Cohen has become a major art collector, spending millions on masterpieces.
Wow.
It's a pretty stark contrast to his image as a ruthless hedge fund manager.
Yeah, you could see it as him trying to clean up his image. Align himself with something beautiful and culturally important.
I could see that.
But you could also see it as just another competition, another way for him to show dominance and collect valuable things.
That's true, too. It's hard to know what's driving him. It could be a real passion, a way to express himself creatively.
Right.
Or it could be strategic, enhance his social status, diversify his portfolio.
Either way, it adds another layer to this already complex guy. We've seen him as a brilliant trader, a fierce competitor, someone who manipulates the system, and now an art aficionado.
He's a lot of things.
So where does all this leave us? What's the takeaway from Steve Cohen's story? Is it a warning about ambition gone wrong? Or is it about the power of bouncing back and reinventing yourself?
I think it's both. Cohen's story shows how the chase for wealth and power can make people compromise ethically, that rules get bent or broken in the name of profit.
Makes sense.
But it also shows that consequences, even big ones, don't always last up. Cohen went through investigations, paid a massive fine, lost his firm, but he came back.
He did.
It really makes you think about what success is, about the limits of being held accountable and the never-ending pull of Wall Street.
Well, if you're interested in learning more about this crazy story, I highly recommend Sheila Kolotkar's book, Black Edge.
Great book.
It's a deep dive into the world of Steve Cohen and his SACI Capital, packed with details and insights that'll stay with you.
It's a story that challenges what we think, forces us to look at tough, ethical questions, and gives us a peek behind the curtain of a world that often operates in secret.
And that's what we try to do here on The Deep Dive, to take you beyond the headlines and into the core of the story, to explore all the twists and turns that shape our world.
We hope you keep asking those questions, keep challenging the norm, and keep searching for a deeper understanding of what makes our society tick.
Thanks for joining us on this deep dive. Until next time, keep exploring.